Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're talking about Disney's earnings, which are scheduled for tomorrow after the closing bell, so Tuesday afternoon. So we're doing a little Disney earnings preview, and then we're also going to see, fittingly, what's going on with Apple's streaming push, and this is after Apple reported their financial results last week. But before we do that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. Disney, as I said, is set to report its Q3 fiscal 2019 earnings results after the closing bell on Tuesday, August 6th, which is just crazy to say August 6th already somehow. But it's worth discussing the stock price and a little bit of Disney Plus before we see what to expect, because that's going to be what's on everyone's mind and what Wall Street and analysts are going to be asking on their earnings call. So let's quickly go over that before we dive into what to expect from their results tomorrow. So as I said, with this in mind, shares of Disney have easily outpaced the market this year. They're up 29% compared to the S&P 500's roughly 16% climb. Disney stock, which is DIS, closed trading Friday at $141.71. Not too far off its 52-week highs. It opened lower Monday, along with much of the market. So nothing really Disney related there, just the market's down for more China-U.S. trade war stuff. And then, as we haven't really alluded to yet, but if you look at their stock charts, if you're sitting around a computer, pull up, Disney stock really took off in April, specifically April 11th. After that, you'll see like a massive one-day spike, and that was after the company detailed its plans for its soon-to-be launched streaming service. It's up 21% since then, and then it slowly, over the last 3 months or so, kind of leveled off. It's up 5.5% over the last 3 months. So the big spike came after they had their preview of what's going to be their streaming push. So now we're going to get into just a little bit of what we know so far. What we know so far is that many in Wall Street assume that Disney Plus will be able to compete alongside or against Netflix, Amazon Prime Video, and then Apple streaming service, which we'll get into, and then Comcast and AT&T. And what we know so far is that Disney Plus will officially launch on November 12th for $6.99 a month, or $69.99 per year. So basically $7 a month or $70 for the year. For reference, Netflix premium plans cost $15.99 a month. So they're coming under way lower than Netflix. And we'll see how long that price sticks around, but it's definitely something that they're trying to have a lower price just to get people in initially. So we'll see if that price, how long they can keep at that $6.99 price, especially as they try to put more and more programming specifically on to Disney Plus. And initially, what you're going to have is that Disney Plus is going to boast arguably the most recognizable names in entertainment. Disney offerings: Pixar, Star Wars, Marvel, National Geographic. I'm going to just sort of do some of these more PR-y things that Disney Plus is promoting, just to show you what they're expecting the average consumer to go on their website, and this is what they think is going to draw them to try this service for $6.99 a month. So they're saying from Moana to Toy Story, Captain Marvel to Star Wars: The Force Awakens, as well as hundreds of titles from National Geographic. So that's what they're promoting. Some kids-focused movies, that Marvel, Star Wars, National Geographic, what they're talking about. And then right when it launches on that November 12th date, they say they will have what looks to be 8 shows / or movies that are just going to be available exclusively on this Disney Plus service. That's the day it launches on November 12th. So this includes Lady and the Tramp, Monsters at Work, Encore, Into the Unknown, which is the making of Frozen, the Star Wars Clone Wars update of that series, Timmy, failure, and then The Mandalorian, which is a Star Wars show. So that's kind of the big draw, the big budget show that they've supposedly approached $15 million per episode. And this is in the first season. By comparison, Game of Thrones didn't hit that spending until its final season. So big budget for this Star Wars show that's going to be available exclusively on Disney Plus. And this shows just how much the entertainment giant is putting forward to this streaming future. And then on top of that, this is maybe where Disney's purchase of Fox kind of, it's been out there for so long, people have maybe forgot how important it could be. And then when we get into the numbers, you'll see how important and how big of business Fox is. So you'll have all 30 seasons of The Simpsons. You'll then have a bunch of other 21st Century Fox classics, and what they promote is from Sound of Music to The Princess Bride. So there are a lot of other big, huge, recognizable movies and TV franchises that are also going to be available with this offering. So it'll be very interesting to see how all of Disney's streaming future goes with it. But as I've talked about on this podcast before, it's not too hard to think that Disney Plus, ESPN Plus, and then Hulu, which Disney now controls, they'll be able to offer maybe the most versatile streaming package if that ever gets to that point in the business. And what is worth pointing out that some of the titles that they now own through Fox, their big Fox deal, will likely live on Hulu because there's going to be no R-rated programming on Disney Plus whatsoever. They're going to try to keep that in that family-oriented PG-13 and under. So things like Deadpool, which they now have, will likely live on Hulu going forward. And then I quickly want to talk about this next stage of Marvel movies, which has happened over the last month or so, because that is a big part of Disney's business going forward. It's really been the last decade of these movie releases. Avengers Endgame just became the highest grossing movie of all time, beat Avatar, which Disney now owns as well. So Disney just has a massive portfolio of these huge movies, but it seemed like people thought that Avengers Endgame at some point was going to be the quote-unquote end to the series or this big Marvel universe, but it seems like they now have a plan to just roll this out for as long as people are still interested. So they recently at Comic-Con in July, Marvel Studio President Kevin Feige detailed their plan for what they call Marvel Phase 4, a bunch of new movies, and then how Disney Plus is going to play a role is they're also going to have some TV shows that then connect in with the movies. So the idea is that Disney Plus will be a place where everything eventually lives that Disney ever makes in theaters, but then it's going to be this kind of interconnected world where some of the shows then dive into what the movies will get into eventually and vice versa and all that. So it's going to be one just giant entertainment world. So they're going to have, for any Marvel fans out there, there's going to be a Loki series, which is from the Thor movies. He's going to have his own series on Disney Plus. There's going to be a show called WandaVision that's part of this new Marvel Cinematic Universe going forward. And then there's going to be a Hawkeye series, which is Jeremy Renner, who has been a part of these movies for some time. And then there's also going to be a Falcon and the Winter Soldier, which is part of the Captain America part of that universe. So they have 4 shows planned that are just going to be available on this Disney Plus service that then kind of tie into some of the movies that they are also releasing that will be available in theaters going forward. And then, as I mentioned, so since 2016, Netflix had been the home for a lot of Disney movies. So Marvel movies, Pixar movies, Star Wars movies would then eventually end up on, if it ended up on streaming, it was on Netflix. Going forward, that is no longer the case, and this is something Netflix has known for forever, and that's why they've slowly spent billions and billions of dollars on their own programming. But going forward, it'll be that Disney, whatever movies they're releasing from Star Wars to their own Pixar movies, will be released in theaters, and then it will, after X amount of time, it'll be available exclusively on Disney Plus. Obviously, they'll still sell Blu-rays and DVDs for anyone who wants to spend $30 on a Blu-ray when you can spend $6.99 a month to have the same offerings and many more. But for whatever people still do that is offering. And then quickly before we get into what to expect from their results tomorrow afternoon, it's worth pointing out just how big some analysts expect Disney Plus to be. So an analyst over at Morgan Stanley recently said that he projects Disney Plus will reach more than 130 million subscribers globally by 2024. And for reference, Netflix closed its most recent quarter with 151.5 million, so roughly 152 million subscribers worldwide. So Morgan Stanley analysts expect it to be Disney Plus to be at 130 million. So even still less than Netflix, but Netflix has been around much, much longer over this next 5-year stretch from its release in the fall. And now I want to get to what to expect in Q3 and then maybe a little bit beyond that. We're going to, so right now our consensus estimates last quarter, Disney's earnings fell 13%, but topped our estimates. So this is as they spend more and more on streaming, their streaming push, they're going to continue to see their earnings take a little bit of a hit. And then meanwhile, its revenues climbed 3% last quarter. And it's also surpassed our consensus mark. So that gives people a sense of what they did last quarter. But then going forward, it's worth noting that a lot of its 21st Century Fox deal wasn't in the report last quarter. I think it was like 10 days of it or something like that. But going forward, now all of that will be in that year-over-year comparison. So for the next year and a half, it's going to look a little exaggerated in these massive growth numbers on the top line. And then it's also going to include its now ownership level stake in Hulu going forward. So that's why when I talk about some of these massive jumps, it'll be including what these new divisions that Fox and Hulu are there for. So Disney's third quarter revenues are projected to climb 42.4% from the year ago period to reach $21.68 billion. So last quarter they did 3%. This quarter they're going to do 42%, and that's because they have those other streams of revenue coming in from there. And then overall, the firm's full year fiscal 2019 revenue is expected to climb over 20% to reach $71.7 billion. And then the following year, fiscal 2020, it's expected to climb 17% above that. So some steadier top-line growth there, but as I said, these numbers are much bigger than people have been used to Disney recently because of these new streams. So then at the bottom end of the income statement, Disney's earnings are projected to fall around 6% this quarter, 5.9% to $1.76 per share. And then meanwhile, its full year fiscal 2019 earnings are supposed to drop over 7%. So that even with this massive top-line growth expected, as they spend more and more money on their streaming push, there's going to be an expected earnings decline for the next year, it seems like. Now I want to get into a little bit more of the specifics for these individual business units, because that's something that Wall Street analysts will be paying close attention to. So it's Media Networks unit, which includes ESPN, is projected to jump 13.5% to around $6.2 billion. And this is based on our key company metrics estimates over here at Zacks. And then just for reference, last quarter, that unit came in flat from the year ago period. And then it's Parks, Experiences, and Consumer Products unit, which obviously pretty self-explanatory what that includes. Those revenues are projected to climb roughly 30% to $5.2 billion. From $5.2 billion to $6.6 billion. So up to that $6.6 billion level. It's worth noting that Star Wars Edge of the Galaxy opened at Disneyland in May, so that could be a reason for the bump as well, along with some of the Fox properties. And then in studio entertainment leg, it's their most hit-or-miss division just based on obvious reasons of box office schedules and the differences between massive hits and what they would call flops, I guess. So last quarter in Q2 2019, that revenue fell. For reference, the company attributes that to the decline. They attribute the decline to, and they This is specifically what they say. So this is for anyone who doesn't pay attention to Disney's earnings. This is what they'll say every quarter. If they had a good quarter in this division or if they had a bad one, they'll just point to what movies came out in the year ago period compared to this quarter they're reporting now. So Black Panther in the continued performance of Star Wars The Last Jedi in the prior year quarter compared to Captain Marvel, and no comparable Star Wars title was the reason for that decline. So with this in mind, Avengers Endgame, which was released in late April, as I mentioned, became the highest grossing film of all time, surpassing Avatar. And then Aladdin also came out in late May, pulled in over $1 billion. And just as a side note, overall, this is as of last Friday, these numbers. Overall, Disney has made more than $7.7 billion at the global box office this year, which is a new record, and we are only through July. So that's a massive number. This box office business has been a huge business for Disney, and it looks like it'll continue going forward with these live action remakes, and Marvel and Star Wars have just been really successful. So right now our estimates call for that studio segment to climb 65% from the year ago period, which was down from last year, to $4.75 billion for the quarter. And then this is the last unit that people want to pay closer attention to. It's that direct consumer and international. They did a little bit of a reshuffling of their business units recently to accommodate their new streaming push. They felt like these units going forward will be more indicative of what their business is. So their direct consumer and international segment is expected to jump from just over $1 billion to $3.37 billion. So a pretty massive jump. And obviously this now includes Hulu as well, because ESPN Plus isn't that big of a business yet, and Disney Plus isn't even out yet. So that's where that's coming from. So now that we've quickly dove into what to expect from Disney tomorrow and jumped into what Disney Plus is going to look like when it's launched in November, I wanted to talk about another company that's planning to launch a similar sounding service this fall, in a company who, instead of reporting tomorrow, they reported last week, and that is Apple. So I want to quickly jump into what their Q3 fiscal 2019 results were last Tuesday. And just for a quick reference, Apple stock, similar to Disney, is up nearly 30% in 2019, but it fell to end the week. And that's not necessarily on an Apple-related news. It was more that trade war-related downturn at the end of last week that's come into Monday morning as well. And for those of you paying attention to this broader tech space, Apple's kind of spent much of the year so far talking about how they are a company that takes privacy very seriously, taking direct shots kind of at Google and Facebook and some of these other big tech competitors. And they're really focusing on their services business. Tim Cook, the CEO of Apple, is trying to do everything he can to convince Wall Street that their slowdown in iPhone revenue and some of the slowdown in China isn't going to matter as much as they beef up their non-hardware related business. So I want to quickly jump into their actual results, and then we'll look at this streaming push, which is going to be part of, or expected to be part of, their streaming unit going forward. So Apple posted better than projected earnings and revenue results last quarter, and then this quarter, so they reported Q3 revenues that were up actually 1%, and this is after last quarter revenues were down 5%. In the quarter before that, revenues were down 4.5%. So to report that 1% jump was a big win for Apple so far after their first two down quarters in fiscal 2019. And then meanwhile, profit dropped 13% year over year. And then more specifically, this is what people might have been a little more pleased with. iPhone revenue did still fall roughly 12% and accounted for about 48% of total revenues, but that was still way better than in Q2 when iPhone revenue was down 17%, and then in Q1 when iPhone revenue was down 15%. So some positivity there. And then meanwhile, sales in Greater China, which also includes Hong Kong and Taiwan, sank 4% But once again, this marked relatively impressive improvement from last quarter when sales in the world's second largest economy fell over 21%. So some positivity for Apple on the revenue side, or at least positivity compared to what they had done so far in 2019. But then what might be slightly alarming, and this is obviously just going to happen as these businesses grow, the year-over-year comparisons become harder on that percentage side, but its services business, which includes App Store sales, mobile payments, device insurance, its Spotify challenger Apple Music, and what is expected to be Apple TV Plus later this fall, those sales climbed 13%, which is a little bit of a slowdown. It's actually the smallest quarterly increase since 2015 in this division, and it came up well short of our estimates for growth, and it's down from last quarter's 16% growth in this unit. So that's something for people to pay attention to going forward, and it's also maybe a reason why Apple has decided they're finally, after kind of some years of speculation that they would get into this business, that they're going to start their own streaming service in the fall. And I want to close out the show with just sort of giving people a preview of that if you haven't been paying attention to the rumors and some of the previews that the company itself has actually put out. So we're going to talk about all we know so far of Apple TV Plus, which it's funny that it's pretty much the exact same name as Disney Plus. So it's interesting that Apple didn't come up with anything a little bit more creative there, but we'll move on past that for now. So on March 25th, Apple teased kind of at this event that its headline for its tagline for Apple TV is "It's Showtime," and then kind of teased what its offerings are going to be. And now there is an official website for Apple TV Plus. So if you go on there, this is their PR jargon, and it's worth just reading this verbatim because it helps give people a sense of what they're advertising this as. So, introducing Apple TV Plus, a new streaming service where the most creative minds in TV and film tell the kinds of stories only they can, featuring original shows and movies across every genre. Apple TV Plus is coming this fall exclusively on the Apple TV app. So that had been some speculation is where people would be able to watch these shows, and now Apple has said it will be available only on their Apple TV app, which they're going to roll out to more places in the lead up to this. So it makes sense that they're kind of keeping this in-house, and they're wanting you, if you want to watch this streaming service, you're going to have to buy more of their hardware or apps as well. So at the moment, Apple TV is it's in that same genre as Roku and Amazon Fire Sticks and Chromecast. It's a device that allows you to watch other streaming services, other HBO services, things like that through there. And right now, Apple TV, the app is going to be available in more places. Apple saying that it's already available on the iPhone, iPad, Apple TV 4K, Apple TV HD. And then they say this fall, which is coinciding with the Apple TV Plus launch, this fall we're bringing Apple TV experience to the Mac. It's also coming to popular smart TVs, streaming boxes, streaming sticks, starting with Samsung. So they're going to have you then just be able to download this app. And then a quick reference for how expensive Apple TV Plus is. It's pretty expensive. You can buy it for $149, which is a lot more expensive than some other devices that pretty much offer the same thing. I don't have an Apple TV, so I can't say exactly what the user experience is like, but it seems like it's a little pricey. But it'll be available on that Apple TV app. So that's where it's going to live. And now I want to quickly just kind of dive into the programming they're going to offer and what that strategy is going to be to help them stand out from Netflix and Disney and Amazon Prime and all of these other services. So there's no price point yet. They have not released a price point, but most of the speculation is that they're going to try to do what Disney is doing and come in far below what Netflix is at, because they're just not going to have the content there. First of all, to justify that price tag, there's not going to be many shows right off the bat, and they want people to at least test out the service. So if the price is too high, they're not going to they're not going to buy Apple TV Plus for a month if it costs just as much as Netflix, especially right away. So that's what we know, and there's no hard date. They just say the fall. So we'll see exactly when that comes out. But as we're getting closer to football season, somehow it's already thinking about the fall being way sooner than possible. So far they have the idea is to kind of roll out maybe an HBO style thing where they have some shows that they're hoping get award buzz, critical acclaim, and then just not have that many. Obviously, HBO has been around for a longer time, so they have a big catalog at this point, but they're going to offer a wide range of shows in some documentaries, some TV shows geared towards different people. So it seems like that HBO model is kind of what they're going for. So far, one of the big first shows they're teasing that's going to be available at the beginning is this space race era show that's it's not factual, so it's not like following actual people, but it's a fictionalized show of that era. It's called For All Mankind. It's created by the Battlestar Galactica creator, and it explores, as I mentioned, just that space race. And then we have Steven Spielberg is going to produce a show. It's actually going to be kind of a reimagining of one of his own shows. It's called Amazing Stories, and this originally premiered in 1985. And what IMDb says about it, I've never watched it. Sorry, I did not watch it over the weekend. They call it a fantasy, horror, and science fiction television anthology series. So those anthology series where it doesn't follow a linear storyline with the same characters have been widely popular. Black Mirror, which is on Netflix, has been hugely popular. So they're hoping they can kind of capitalize on the love for that programming. And then they're also going to have maybe their biggest show in terms of names that's going to be offered right away is a show that's going to have Steve Carell, Jennifer Aniston, and Reese Witherspoon. It's going to be about a morning television show, and they reportedly already signed up for 2 seasons of that. It's going to be Steve Carell of Office fame back on TV for the first time, and that's obviously those are some of the biggest names in Hollywood, so that's what Apple's trying to get you. Steven Spielberg, arguably one of the biggest directors of all time, he's going to be there producing a show. And then they also have invested heavily in a post-apocalyptic, drama series that's going to be starring Jason Momoa, who was on Game of Thrones. He's Aquaman. You probably recognize him. So they've already supposedly spent a lot on that. That's one of their big budget. The trailer looks pretty good, as does For All Mankind. So I encourage you just to watch the snippets. It looks pretty quality on that kind of HBO level, which is where they hope to get. They've also signed what is just, they call it kind of an overarching deal with Oprah Winfrey. They have a new thriller coming from the Sixth Sense writer and director M. Night Shyamalan. They also have then some, these aren't official, but it seems like they probably are going to have it. There's a scripted series that's supposed to be based on the life of NBA star Kevin Durant. The guys who made Always Sunny in Philadelphia are going to have a show supposedly on Apple TV Plus. They're unofficially linked to an adaptation of sci-fi writer Isaac Asimov's Foundation series, so we'll see that. But some other big names as well on there. J.J. Abrams is producing a series. So it's going to be interesting to see what Apple really does with Apple TV Plus this fall, but it's part of their big streaming push. And as I mentioned, though, that business has lagged a little bit. And as iPhone sales continue to slow down, it's going to be a big part of Apple's pitch to investors and analysts in Wall Street is we can be more than just this iPhone company. So definitely pay attention to how well Apple TV Plus is received this fall alongside Disney Plus as the streaming wars really start to ramp up this fall. But that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.